All right, let's get right into it. We're looking at a company that's a true giant in the tech world, but it's facing a huge question right now. Is it a titan in trouble, or is it secretly gearing up for a massive comeback? Yep, we're talking about Infosys. Look, for decades, Infosys has been one of those solid blue-chip companies, a name you just knew meant stability, growth, the whole rise of India's IT powerhouse. For a lot of people, this stock built fortunes. But lately, that story has gotten way more complicated. Because over the past year, this is the number that's been telling the story. A drop of 24% in its stock price. I mean, that's a staggering hit for an industry leader, and it's left a lot of people scratching their heads, wondering what on earth is going on. And that's really the core puzzle we're going to unpack today. We're going to dig into exactly why the stock took such a beating. But, and this is the exciting part, we're also going to explore this powerful counterstory that suggests the company's biggest days, well, they might still be ahead. Okay, so first things first, let's look at the bear case. To really get why the market turned so negative on Infosys, you have to understand the specific things that drove that stock down.
So this slump wasn't just one thing. It was more like a perfect storm of 3 different pressures hitting the company all at the same time. Let's break down exactly what those 3 triggers were.
And here they are, laid out pretty clearly. First up, the government brought in a new labor code, which, bam, hit Infosys with a huge one-time charge of almost 1,300 crore rupees. At the same time, and this is point number 2, their profit margins got squeezed, dropping nearly 3%. Then, you layer on top of all that a general fear in the market, our third point, that big companies in North America were about to pull back on their IT spending. It was a total triple whammy.
Now, if we stopped right there, you'd probably think the company was in some serious trouble. But that is not even close to the full picture. Because while all of this was playing out, Infosys was quietly lining up one of the biggest deals in its entire history.
So let's flip the script and look at the other side of this. This is the bull case. It's the argument that Infosys isn't just treading water, it's actually making a huge strategic pivot toward the future with a massive bet on artificial intelligence.
And this is the number that just completely changes the conversation. A 1.2 billion pound contract. That's over 14,000 crore rupees. A deal so big it basically forces you to rethink the company's entire growth story.
So what is this mega deal? Well, it's a monster 15-year contract to basically become the new AI-powered brain for the UK's National Health Service. They're going to completely overhaul the system for managing their workforce. We're talking about almost 2 million people. And here's the absolute key. The whole thing is built around Infosys' own AI platform called Topaz. It's the perfect illustration of their new game plan.
And you can just hear the confidence in the CEO's own words, right? Salil Parekh doesn't just call it a contract. He calls it generational change. He's explicitly tying this huge win to their AI platform, pretty much sending a massive signal to the market that for Infosys, AI isn't just some buzzword anymore. It's the core of their biggest, most important deals.
Okay, so we've got these 2 totally competing stories, right? The struggling old-school giant versus the cutting-edge AI innovator. So how do we figure out which story the data actually backs up? Let's put them side by side and take a look. This slide really lays out that tug of war. On the left, you've got the bears, and they're saying, look, the stock is still basically flatlining near its lows, and the technical charts still look pretty bearish. They'll point to something like the PEG ratio and argue it might still be overvalued. But then, on the right, the bulls see a completely different picture. They see a company that's actually cheaper than its competitors when you look at the PE ratio. They see a nice, healthy dividend that pays you to wait, and, maybe most importantly, they see the company's own management saying, hey, we see more growth coming.
So, with the numbers kind of pointing in both directions, where does that leave the pros? What do the market analysts who follow this stock every single day actually think? Well, the verdict is actually surprisingly clear. Check this out. Despite all the negative headlines in that stock slump, a whopping 61% of the 44 analysts who cover Infosys rate it a buy, and only a tiny sliver, just 5%, are saying sell. That really suggests that the expert community sees this recent weakness as a potential opportunity. And this brings us to the one key idea that kind of ties this whole thing together, the concept of a value play. It's exactly what those analysts are seeing. You've got this fundamentally strong company that's been beaten down by some short-term problems. But lurking just underneath is this major new growth engine in AI. The bet is that eventually the market is going to wake up, look past the recent slump, and realize its true long-term value. And that leaves us with the final, really big question. This isn't just about Infosys and its stock price anymore.
That NHS deal is one of the first giant contracts where AI isn't just a feature, it's the absolute centerpiece. So, is what we're seeing here a preview of the future for the entire IT services industry? A future where winning isn't just about being big, but about being smart? Now that is the billion-dollar question.